Ever looked at your savings account and wondered, is this really the best I can do? Or maybe you've dipped your toes into investing, but the ups and downs make you a little nervous? You're not alone. We're all searching for that sweet spot, the balance between growth and security. And that brings us to the real question, is your money truly safe in platforms like StashAway Cash? See, we're bombarded with promises of high returns and easy access, especially in the realm of digital wealth management. But when it comes to your hard-earned cash, trust me just doesn't cut it. You need concrete answers. You need to understand the nuts and bolts. StashAway Cash, like many similar products, offers a way to park your money and earn a potentially higher return than a traditional savings account. But here's the crucial point, it's not a bank account. It's not protected by government deposit insurance schemes like the FDIC in the US or similar schemes in other countries. That means your money isn't guaranteed in the same way your savings in a licensed bank might be. So, what is it then? StashAway Cash primarily invests in money market funds. These funds, in turn, hold short-term, high-quality debt instruments. Think government treasury bills, commercial paper from reputable companies, and other similar assets. These are generally considered low risk, but they are not risk-free. Here's where things get interesting. The perceived safety of StashAway Cash comes from the underlying assets of the money market funds. These funds are designed to maintain a stable net asset value, meaning the price per unit should remain relatively constant. However, in extreme market conditions, even these funds can experience fluctuations. Think of it like this, if a major financial institution defaults or if there's a sudden and widespread economic downturn, the value of the assets held by the money market fund could decline. This could lead to losses for investors in StashAway Cash. Now, StashAway, and other similar platforms, do conduct due diligence on the funds they offer. They aim to select reputable fund managers and diversified portfolios. But this doesn't eliminate all risk. It simply mitigates it. The platform also offers transparency, allowing you to see the underlying assets of the funds. This is crucial. Understanding what you're invested in is the first step towards making informed decisions. Another factor to consider is the regulatory framework. StashAway is regulated by the Monetary Authority of Singapore, MAS, which imposes strict requirements on financial institutions. This provides a layer of oversight and protection. However, regulation doesn't guarantee your capital. It's important to differentiate between the platform's security and the underlying investment risk. StashAway itself employs robust security measures to protect your data and funds. They use encryption, two-factor authentication, and other security protocols. But these measures protect against fraud and cyber attacks, not market risk. Ultimately, the question of whether StashAway Cash is guaranteed boils down to your risk tolerance. If you're looking for absolute certainty and government-backed guarantees, then traditional savings accounts are likely a better fit. But if you're comfortable with a slightly higher level of risk in exchange for potentially higher returns, then StashAway Cash could be a viable option. Remember, diversification is key. Don't put all your eggs in one basket. Consider spreading your investments across different asset classes and platforms. Understand the risks involved, and never invest more than you can afford to lose. Do your own research, read the fine print, and make informed decisions based on your individual circumstances. With that said, thanks for watching, and until next time.